All right, let's talk through this lunch macro. So time-based range, 12 o'clock to 1 o'clock. And we know that inside this lunch macro, our narrative so far was an AM decline. So could have done a better job spotting that the sweep at this low was not a rejection. So even on the 1 minute, you can see that the sweep at this low was not a rejection. So that was your first clue that we're not talking about a rejection off of the AM low. And as we look through this price action, we've got this 5 minute liquidity, but we also have relative equal highs here, and we have internal liquidity here. So on the anticipation that you could be looking for two session down close, we're taking the midpoint of lunch, so right around this 12:30 to 12:20 to 12:45, and you're framing this run up as not a bullish reversal. So a couple of clues. The fair value gap was not cleanly tested. There's really no breaker here until this point. Breaker was not tested. So there's liquidity that's being chased here. So as price clears through that 12:30 window and you are watching the next candle's print, you see your first indication of a consolidation. You see a run up taking internal liquidity but not external, and you're watching these gaps for possible inversion. And you're watching this order block for possible inversion. So once that consolidation runs a high and we get a teasing of an internal liquidity but not external, you should be keeping your bearings on the fact that this wasn't a clean rejection of the AM low. It was not the right time of day anyway at 11:55. We have this run up but no specific retest. There's no good inefficiency in here. Even the inversion fair value gap down here doesn't get tested. We run up, and so as price starts to break through these levels, really what you want to be looking for is a short position for a two session down close, even if you took it at the top of the liquidity high. And what you'd be aiming for is to get down to Monday's low, new week opening gap mid. And so as price starts to work its way through the second half, right, what we're talking about here is a buy model or a sell program with a buy side. So this is a buy side in a sell program. And so when you get the opportunity for entries on inversion, paying close attention to those midpoints, you're watching for how price will start clearing levels. So on the swing here, this internal liquidity is going to be a key factor. So you have a swing low broken, you have liquidity within this buy side of a sell program. And so as you get through lunch here, you're watching to see if this level, the midpoint, this inversion, and this inversion hold. So the trade is a good setup because we had not a failure of the AM low. It was before lunch. Normally, if you saw that sweep, you would expect to see a clean classic reversal. Didn't get a clean classic reversal. You had a movement higher, which just wicked minor liquidity and started to break down. So as we get into the true PM session, we want to see how price is using those levels. So we're paying attention to the midpoint of lunch, and we're paying attention to the low. So we're watching to see as the low gets formulated here. So 1 o'clock, low from 12, high from 12 to 1. We start to consolidate. And that consolidation is going to have some draw up somewhere. So let's pay attention to how liquidity gets used. So as we get into 130, at 130, we create sell side. We have this chip lower, leaving a breaker. We know that we're in a sell program or a sell model. So even if we have a buy side in an overall sell program, we can have another buy side in an overall sell program. So what that means is on lower time frames, we're going to be aiming for levels of liquidity which line up with areas that we've already determined as areas of interest. So when we sweep that low on lunch, this structure is only saying I want some form of a retracement into this bearish leg. So whenever we have sweeps of liquidity, we're then looking for levels that would have been seen as bullish fail. So we had this potentially bullish setup that we now want to see fail. So when that setup gets a close below, we have this sell side that could help us to say, all right, we're definitely going lower. Once that sell side is taken, we have a high taken, a low taken. So this is our classic 2022, fair value gap number 1, fair value gap number 2. We have a 5-minute order block, and we have this 1-minute breaker that's now going to turn into inversion. So with this leg, we want to be at the 50% or higher premium. So we'll take this breaker, and I like when you have this wick down here because it's a real indication that you'll be at the top of the fair value gap, or you're going to go straight to the 5-minute order block, or you would take that fair value gap in there. So if we took the order block, stop above a swing high, safest spot would be here. We are broken in the lunch range. We're going back to the lunch low, and we'd have the same target for the Monday low. So as price comes back into the areas that we want, it's a nice revisit to the order block, maybe just shy of that fair value gap. Nice respect on the inversion breaker. Nice double touch on the inversion breaker here. And now we're looking at all of these fair value gaps that would be seen as bullish, all of these breakers that would be seen as bullish potential setups, and we're looking for them to be inversions. So as we clear off the rest of this chart, and we just break down the price action here, we can see that we're on the sell side in a sell program. So we're looking for terminus to be that predictable level for the Monday low. So this would be a much better read on the lunch range. And then again, the second position where you're looking at second stage distribution or redistribution, because we're maintaining in a sell program, even though we have a buy side in a sell program. So this is a good journal entry for the lunch macro, as well as taking your plays after the lunch range has been fully determined.